Now, although Tesla shares are down about 4% today, the electric car company is up 30% this year. So should it be something we're looking to invest in? I want to bring in Everplus Capital's Jason Rotman. And, you know, one thing, I've been in and out of the stock for about 10 years, Jason. And I got to tell you, I root for Elon Musk, in part because so many people root against him. I think he's a visionary. Maybe he's part P.T. Barnum also, admittedly. Maybe he takes advantage of government subsidies, which he should do if they're out there. But he's really winning so far. But would you buy the stock?
You know what? I think you buy the stock heading into 2020. I will say that even after a pretty significant run-up, Charles, I think Tesla's still undervalued in the big picture. Am I going to put out a $4,000 price target in 10 years? No, at this point. But I think Tesla's going to go to, at least $1,000 within the next 36 months. Again, it's undervalued relative to the white space that it is just starting to attack in China. Even just that alone.
What about the other part? Because a lot of folks say if you just do an analysis versus any car company in the world, but particularly Ford and General Motors, there's no way to justify 420, 1,000, or 4,000. But I think, I think the battery story is underplayed as well.
Right. So they just received, which I think you're probably alluding to, they just received a patent on what Elon Musk is calling a million-mile lithium-ion battery. So Tesla's not just P.T. Barnum. They're not just a brand story. They're a technology story as well. And I think you're right that technology story is kind of adds to their undervaluation as well. They're not just a cool Cybertruck. They have protected patents.
Technology, obviously, the momentum stocks have regained that strength late in the year. They're coming on strong. A lot of folks are talking about what Netflix has done over the last decade. It's so hard and it seems so improbable to say, hey, a stock could go 4,000% in 10 years, yet it happens every decade. These names have become synonymous with these big moves to the upside. Many people want to buy them. They're afraid to buy them. They don't buy them when they go up, and they don't buy them when they dip. The folks on the sidelines. Right. Are these still names, these classic momentum names that now dominate tech and now the communication services sector, are they still worth buying?
Well, listen, the best investors don't look at tomorrow, from a stock investing standpoint. As you know, Charles, the best investors say, where's the world going to be 5 years from now? What's the world going to look like 10, 15 years from now? Those people that saw Apple 15 years ago have made quite a good profit. Amazon. I mean, me and my buddy were talking about, what if we just put 10 grand after we graduated college in 2001 in Amazon and just did nothing? There are companies like that now that you can do that in. You just have to be willing to ride. I mean, Amazon's taken multiple 50% dips over the past 20 years. You just have to be able to ride that volatility and just hang on to certain companies.
You have to know the story. You have to understand the fundamentals, something I keep preaching. Later on in the show, I'll bring you back and ask you what someone should do with $10,000 now, Jason. Thanks a lot.
Sounds good.